In the world of higher yielding stocks and ETFs, I can say with almost certainty there's always a catch that comes along with those higher than average yields. Now, whether it's a massive price decay over time, a slippery strategy, or even maybe worse of all, huge dividend cuts, most of the higher yielding instruments throughout the market all come with some negatives. But what I've seemed to have found in the last year is one of the only ETFs that has a rock solid strategy, a massive starting dividend yield, and huge capital appreciation as far as ETF price. Now stay tuned until the end of this video because we are going to go over the exact ETF that I'm talking about and why I've been buying so many shares of it like crazy. Now we're going to go through all this and more in today's video. Right after you please drop a like on it and subscribe for more content like this in the future. Now the ETF that I'm talking about that pretty much crosses off all the bases and that I've been buying like crazy is the JP Morgan Nasdaq Equity Premium Income ETF, or known as ticker symbol JEPQ. Now right here on the JP Morgan website, it says that JEPQ is designed to provide current income while maintaining prospects for capital appreciation. It generates income through a combination of selling options and investing in US large cap growth stocks, seeking to deliver a monthly income stream from associated option premiums and stock dividends. Also seeks to deliver a significant portion of returns associated with the Nasdaq 100 index, but with less volatility because of the option overlay. Also constructs a long-term equity portfolio through a proprietary data science-driven approach designed to drive portfolio allocations while maximizing risk-adjusted returns. Now, if you're a dividend investor that's familiar with other covered call ETFs, things like qyld or even jepi, JEPQ's brother or sister if you will, the investment process, the way that it works is pretty simple. It first is underlying equity portfolio, apply data science process utilizing 40 years plus of JP Morgan proprietary data to create a fundamental framework for security selection and portfolio construction. Now with that option overlay, this is where the covered call aspect comes in. A 1 month out of the money call option designed to generate income because of the premium received from selling the call and give investors a portion of the upside with reduced volatility. So with the covered call strategy, you are going to be capping your upside because you're setting a strike price on which you're okay with selling the equity at. But also in the case that in the meantime, the market trades sideways or even moves down, the option overlay is definitely going to be reducing volatility and definitely helping conserve some of the money. Now with this process, you get JEPQ. I told you it was simple. A well-represented, fundamentally driven Nasdaq 100 strategy that seeks to provide clients with a monthly distributable income, which we're going to go over here in a second, via option premiums and dividends. So at this point, I know what you're saying. Well, that sounds like pretty much any other covered call ETF. What makes JEPQ so different? Well, first off, because of JEPQ's holding breakdowns, being technology almost 50% of the overall fund, communication 15%, consumer cyclical almost 14%, healthcare 7%, consumer defensive 7%, industrials 4%, utilities, financials, real estate and energy a small portion. Now once again, because of the holdings breakdown, which is basically for the most part a whole lot of technology, the JEPQ ETF is actually going to see some massive share price appreciation because of the holding breakdown. And to be even more specific, some of the top holdings of this ETF are things like Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta. These are all names that now at this point have ran pretty high this year. And even with the cover call strategy making up a strategy in this ETF, because of JEPQ's holdings being so heavily exposed to technology, the year-to-date performance for a covered call fund that has a massive dividend yield that you're going to see here in 1 minute, the year-to-date performance is over 21%, which in my opinion for more dividend income focused investors is enough to be more than thrilled about. Now before we go into the dividends, let's quickly go over some more just facts about JEPQ as of right now. The 52-week range is $39.60 and around $50. So JEPQ currently is trading at pretty much the high end of the 52-week range. Now, if you were like me and if you were able to buy quite a bit of JEPQ in the 40, 45-ish range not all that long ago, at this moment, you're not only locked in on a very nice monthly dividend that should definitely help pay the bills, but also you are up pretty substantially on your overall investment. JEPQ has an expense ratio of just 0.35%, which is pretty much industry standard or even on the lower end for covered call funds. The dividend frequency is monthly. The dividend trailing 12 months is $5.67 per share. The yield over the last 12 months is around 11.59. And assets under management is already up to $4.58 billion, which is pretty high considering this fund has been around for just about a year. Next, looking into the dividend, which is the main reason a lot of investors are drawn to covered call funds in the first place, and definitely what drew me into JEPQ right from the start. Now, JEPQ's last declared dividend was 37 cents, and if we look at the max payout history as far as JEPQ so far since inception, that is, I guess, on the lower end as far as all dividends that have been paid so far. But even with the just 37 cents paid, investors that are seeking income are still getting an overall very decent annualized yield. And if history was to repeat itself, we should be seeing some higher distributions coming soon. But like I said earlier, the cool thing about JEPQ and what really draws me in and what makes me keep buying more and more shares over time is the fact that it offers more than just a nice juicy dividend. It's also the fact that the holding breakdown offer massive capital appreciation long term if of course the overall market keeps trending up and to the right. Now lastly, if we were to compare JEPQ to SPY, the S&P 500, and look at both of the ETF's total performance, which is dividends plus share price included, JEPQ just year to date has returned, with the dividends included, 27.29%. Where SPY, the S&P 500, has returned 20.47%. Now, this is by no means saying that any investor should definitely not buy into the S&P 500 and buy JEPQ. But all I'm saying is that, as far as covered call ETFs go, JEPQ has performed very, very well, has a great strategy, has a basket of holdings that I'm personally willing to bet will perform pretty well long term, and has a nice juicy dividend that's going to be paying me on a consistent basis from now until forever. Now, like I was saying towards the beginning of this video, there's lots of different higher yielding ETFs, especially covered call ETFs out there. But unfortunately, a lot of the good also comes with the bad. You see, if we were to compare JEPQ, for example, next to 3 other popular high yielding ETFs, ETFs like RYLD, JPRE, or even qyld, all 4 of these ETFs have something in common. They all start with a very high starting dividend yield. But as you can see, if we look at the total return year to date so far, JEPQ, because of the strategy, and of course because of the holdings, has had the most upside as far as total return so far this year. Where on the other side, an ETF like RYLD, that does have a massive starting dividend yield, relatively speaking, is only up year to date with dividends included, 3.39%. JPRE, also a nice starting dividend yield, up only 4.56%. And to be fair, qyld not all that far behind JEPQ, but still lagging behind because of the holdings and because of the strategy, up 21.62%. But after tons of research and tons of scouring different high starting yielding ETFs, it's very hard, it's very tough to find something that seems to have a better long-term outlook than JEPQ, because once again, simply put, the holdings makeup, the strategy, and the overall interest from investors when it comes to JEPQ. But I want to hear from you guys down below when it comes to JEPQ and of course all other covered call ETFs. What do you think about JEPQ, this newer ETF, and are you currently buying it? And if not, what other covered call ETFs should we look into? If you enjoyed this video, make sure to please drop a like in this video and subscribe for more content like this in the future. Thanks for stopping by, guys, and I'll see you in the next one.